Hi guys, in this video I'm going to talk to you about some of the mainstream media articles. And I'm going to debunk some of the myths and things that you're reading about in the media because it's all over the place. My name is Adam Panisi. I do these videos to help you guys get into your own property deals and make money from property. I've got a couple of $100 million worth of property developments myself, and I monitor the market very closely to make sure that what we're developing and the markets we're developing in are obviously going to stay at least the same level as what they are, or hopefully they go up in value, but that's not always the case. And the strategies that I teach are active property strategies like property development, where you can make money in any market. You just don't want to get into a market where the market is coming off by 10 or 20%. But to do this thing properly, I teach to buy in certain locations where that's definitely not going to be the case. So it's funny reading articles like these where they think the housing market is going to come off by, 10 or 20% over the next 1 or 2 years. One thing I do agree with in here, though, is we are due for another boom, and that's going to be off the back of undersupply in the construction industry. So we're seeing all these builders go broke. We have seen this in like every week in the newspapers and articles and things. So one thing for sure is that there's going to be a massive undersupply in houses, and that's going to create even more pressure with the end property price. And that's going to be seen by probably the end of 2023 or into 2024. And it's going to be dependent on the market that you're in. We're already seeing that even now. So we're seeing these negative media headlines where property prices are going down. In some areas that I'm developing in, the prices are still going up. And I think that we'll probably do 10 or 20% growth in some of the areas that I'm involved with, just because there's a massive undersupply and there's literally no new housing stock in those areas. So they're obviously highly restricted areas in terms of supply. There's a high demand for that type of property and product, and the buyers coming into those markets can actually afford to purchase these types of properties. So this graph here, yes, I agree that we're going to have across the board a boom in 2024. So that's, this line here, that the market is going to accelerate in 2024. That's what these guys have forecasted. But as for 2022, 2023, it's all of these below the line values where, they're thinking anything from 5 to 15+% for a lot of the capital cities, which I think is pretty crazy. Yes, there's going to be areas that people have just paid silly money for. They've just gone well beyond their true value. And normally a really good indicator of finding properties that are beyond their true value is to look at where they've come from and also where they are now, but then look at other suburbs surrounding those or other areas surrounding those which have equally as good amenity, which haven't had that price growth yet. So the only way to really do that quickly is to actually know the area, know the values well, but then obviously look at historical data. There's ways to do like an overview on this, even just using free tools like realestate.com, where you can search suburb by median price, and you can see which properties or which areas have got certain median prices and which ones don't. And you can kind of see that on a map. So you can do that on realestate.com. I'm not going to go through that now. I just want to point out some of these forecasts. And I truly believe that the next 12 to 24 months, if it even lasts for that long, are going to be the best buying opportunities for the next year. For the next cycle. So it's interesting seeing that. And these guys, this article talks about the cash rate going, up to 3 and 4%. In the last week, we've seen the major banks cut their fixed interest rates on their 3-year term fixed rates by 1.5%. They went from 6.5% down to like 4.99% for the fixed rate. That means obviously that the banks are wanting, one, for you to chip into a fixed rate so that they can hopefully make more money. But secondly, it means that variable rates are probably not going to get beyond 4.99%, which means I don't agree with this, and I never have. I truly think that our cash rate's probably going to peak at about somewhere between 2 and 2.5. Now, I know we're etching already on the 2% with the RBA cash rate. I don't think it's got much more left to go. And if you're having a look at the markets around the world, they've already started to come off. America's talking about going into recession at the moment. So obviously that has a lot of factors on our economy as well. And because we're such a globally connected economy now, that things in America, the largest economy in the world, obviously affects other parts of the world, and Australia being one of them. And we're just such a small drop in the ocean compared to their market. And similarly with China as well. But I think although we are connected to China, really the US market is really felt around the world as well. So that's on this article. It's funny, I just saw another one just a couple of days ago, which said that property market's about to boom again. So you got one article that's saying we're going to drop by 10 to 20% in the next year, this year and next year. And then there's another article that says, oh, well, property prices are about to boom. So the best articles, or the articles that get the most views generally, are the negative headlines. So of course, the media is going to hype the negative headlines. They do it every cycle. When the property market's booming, they can't really say property prices are going to fall in a booming market. They'll look silly. But although this one has done that because everyone else is talking about negative headlines, but these guys are now saying, oh, we're going to boom. And this one real estate agent got a few more people to his open home and it sold above market value. So, it talks about house in Eastwood. There was 17 registered buyers. It sold $600,000 above reserve price. That's great. That's one property in a whole market. Yes, there are going to be areas that are going to boom, and that's what I talk about, having highly restricted supply. So chances are, and I don't know this property, I haven't looked at what this property that they're talking about, but chances are you've got this individual property, there's going to be nothing else in the area for sale. So again, what I spoke about, yes, you got all these markets going down, and the markets that are in undersupply, and you've got buyers that can actually afford to spend more money, which obviously this is the case, well, they're not going to see the 20% negative decline. So it's those markets that you want to be targeted on. And the only way, like I mentioned before, is you do a bird's eye view of the map on realestate.com is the easy free way to do it, showing different suburbs and their pricing point. But if you follow certain suburbs and know the suburbs inside and out, drive the streets, have a look at what's under construction. Is there much under construction at all? And chances are, if there's not much listed for sale, there's not any new stock coming online, and that market is tightly held, well, in the next couple of years, you can kind of forecast that more demand is coming in, providing that you're in, economic areas of growth with like job security or more jobs being created. So I'm not talking necessarily about regionals unless you're next to like a mine and the mine's hiring more people and our commodity prices are going to stay strong. I'm talking about more so infill capital city type areas where the economic growth in the capital cities is going to be greater generally than other regional towns. So yeah, you got this one property that's booming. So now let's throw a headline to say that everything's booming. And obviously that's where we are with cash rate. It's not telling you anything you don't already know. And the last one I just wanted to share was, again, another negative media article about, bank's bleak prediction that house prices will fall 18%. How many times has the bank got it right over the last couple of years? And the other consideration is the bank does tell the media certain things, and obviously they want the media to print negative headlines at the moment because they're wanting to scale back the economy, and it's probably really driven by the inflation that we're in at the moment. So they don't want people to be spending money on property and driving the prices up. So what that means is the majority are going to be reading articles like this and thinking, oh, well, now's not a good time to buy. I'm just going to wait. Remember the media articles at the start of COVID? There were media articles into 2017, 18, 19 about how poor the market had performed. But if you had bought over those couple of years, you obviously would have made a huge amount of money, irrespective of COVID. There were markets about to start booming, and really all the capital cities were in well undersupplied. The majority of those, I'm just talking about as general, they were in undersupply and they were all really affordable. So people think, yeah, properties, not that affordable at the moment, but you got to consider what it's going to be in 10 plus years time. And when we go through the next boom cycle, how many people is that going to then price out of the market again? And it will happen again. People 50 years ago didn't think we'd have property prices the way that they are now. But as our population grows, as our net worth grows as a country, as we're more globally connected to countries like the US, where there's a whole lot more money in the US and other European countries, then our net wealth is going to grow, our property prices are going to keep increasing, and we've got this constant migration flow, which is about to start ramping up again. So if people think that rents are bad now, or we're in a rent crisis, imagine, or just think about in 12 or 24 months time, when you've got 200,000 people a year coming in as migrants, we're going to start to have a massive rent problem. And not only are we going to have a massive rent problem, then it's going to flow on to owner-occupiers as well. So people wanting to buy their own home, or people wanting to buy investment properties. So it's just going to go crazy again. And I actually wouldn't be surprised if we have another COVID-style boom. It won't be as quick. It'll be off the back of a construction boom. It'll probably last for 3 years. And we'll probably see, I truly believe we're going to see some growth in the order of 30 or 40% in that 3-year period. It may not be across the board, but we're definitely going to see that 30 or 40% in those heavily constrained areas that have no supply at the moment, and they're tightly held because people are sitting on a lot of money. We're at record saving rates at the moment. I don't have a graph on that, but the last graph I looked at, we were still sitting on record saving amounts as a country, as a population. And you add a little bit of fear into the market, people are going to be sitting on more cash, and we're going to be a lot more cashed up as a nation in 12 months time than what we are now. And if it keeps going beyond 12 months, 24 months, people will have money to buy investments at that point in time. So it's interesting to see what is going to transpire, and reading articles like this talking about how negative or how bad the property market is, it just even more tells me that now is the best time to be buying in those undersupplied areas, especially if you're doing active property strategies like property development. It comes in cycles. Property developments, if you're going end to end, they do take time. If you're doing a small property development, it might take you 9 to 12 months to be in and out. If you're doing larger property development deals like I am, 3 to 5 years is not uncommon. So I'm personally looking at what areas are going to boom over the next 3 to 5 years for those mid-range style projects. But even if you're looking at the smaller projects and you want to be in and out in 12 months, just look at areas that are highly constrained, because they're not going to see these negative 10 or 20% declines that the media is portraying at the moment. So they love to throw graphs and things to try and make it look really enticing and make you buy into all of this hype, but that's not the true picture in a lot of areas. Now, stay away from areas and pockets that are in oversupply, because those oversupplied areas are always the ones that take a hit, where people have been oversold properties. Like 1,000 units, 2,000 units go into an area, they get sold by project marketers, they get sold to the overseas market. They're normally already 20% over what they should be. So they're already selling at a premium, and that's normally to price in the project marketers' fees. And also obviously the developer's margin, but it's those properties that take a massive hit, not so much the suburban properties that can't be copied and pasted 1,000 or 2,000 times in highly restricted and constrained areas. So next time you're looking at media articles, just take them with a grain of salt. Obviously, I still read the mainstream media to see what the masses are doing, but don't rely on what the masses are doing. Make your own investment decisions yourself. And I truly believe that now, for the next 12 to 24 months, is the best time to be buying anything. But in saying that, you got to make sure that you are buying the right property in the right area. And if you're not educated and you just going to do a scattergun approach, then you're going to get a scattergun result. You might do well, or you may not. And I've seen it both sides of the spectrum. So now is a good time to really start to get educated, know the stuff inside and out, and know that when you do buy, you're going to be buying in a market where it at least stays level. and for the next couple of years, and you do an add value strategy like property development or renovation, whatever that is, or you buy under market value. So you lock in money from day one when you're buying, and you're not relying on market growth. The market growth is just a bonus, and you want to pick obviously the credentials and the area and the pockets where it's more likely to get that market growth. But if it doesn't happen for 2 years or 3 years, then that's okay, because you've already made money on the way in, and you've made money from that active property strategy. You don't have to be at the effect of the market. I hope that's really helped. Any questions, please let me know, and follow and subscribe my channel for more free content. And if you do like what we do, I do have an advanced program as well, where I teach you the 7 stages of property development and how you can make money at every one of those stages, even stage 1, which is the buying stage. Have fun, and thanks for watching.